Hey folks, went over, got a bunch of numbers. I meant to put this out last night. I just was tired and went to bed. Got up early this morning to see if I could confirm more numbers anyway and forgot to put this out. Anyhow, the Fed's talking about tapering. I don't know if any of you heard this, okay? It came on late, okay? They're also talking about trying to reduce the national debt. I could not believe what I just heard. But oh my, and have they extended the debt ceiling? Okay, there's a struggle going on right there. Okay, isn't there? All right. So the next thing is money velocity is tanked and remaining low. And the manufacturing numbers just came out and they are the lowest in 6 months. Of course, they are a month behind, but it's the lowest report in 6 months, just came out. So let me open with a disclaimer. This video is not economics advice, financial advice, or advice of any kind. You and you alone are responsible to seek out the professional advice that is right for you in all the affairs of your life. This video is for entertainment purposes only. So we see all of this stuff going out, but the big one that set me off last night, red light flashing, because these other conditions have been existing, was the Fed talking about tapering in September. And that usually leads to what we saw before, the taper tantrum. Type that in your browser, look it up. I'm doing this video so that if you haven't been paying attention, if you haven't been watching, that you are aware that it's about time to begin. We should be already prepared for phase 2 of our plan. And phase 3 is then real estate. But phase 2, we were going to get a couple of hits, 2 to 3 hits out of the markets, weren't we? And a chance to play SLV and many other things. So anyway, that being said, I think our time is coming between now and say October 21st. We'll see. We kind of figured that anyway, but things just are looking really bad. From what I hear, 4 in 10 are under financial stress. Savings rates have plummeted now. Remember I said savings rates were up to 30% during COVID? Now they're plummeting. That must have been due to people not paying rents or mortgages. Maybe people just didn't pay their bills. I don't know. You know what I mean? So maybe that was it. I own ExxonMobil, full disclosure there. But Gregory Mannarino just came out and called on ExxonMobil. So, and oil. He's looking at that. He thinks they're going to continue to drive it higher. I will not sell my oil plays. I bought them at the bottom when oil tanked and everybody was running for the hills. That's generally when I buy, if it's a decent company that I know is going to last. And I think ExxonMobil is going to be a good long-term play. And I may pick up more if this market turns hard because they throw the babies out with the bathwater. So I may pick up more ExxonMobil as well because they have this plastic recycling process that apparently is pretty darn good. So they're part of the green agenda as well. And there's some other factors in there such as being able to push hydrogen, so on and so forth, okay? So be aware of that. So we've got this housing moratorium ended. The evictions have started. Money velocity down. We've got the Fed talking about tapering. We've got Delta variant on the rise. We've got a manufacturing number just came out, lowest in 6 months. And we've got sell-offs coming in Amazon. You just saw that 10% hit plus off the top, and Tencent 10% hit to 20% hit off the top there. Several other companies around start looking at these chops taking place. Generally, when I see chops like this on major corporations, that's somebody big selling out. We have the retraction of the credit lines, don't we? Maybe the banks are preparing. Fed talking about tapering, credit lines being pulled back. Now I'm hearing this is starting to go to credit cards, okay? So folks, be aware. We also got a few million people about to have their credit score decimated from delinquent mortgages, being evicted, so on and so forth. So we've got a lot of things going on here. I just want to do this video to make, in case you weren't paying attention for some reason, like getting into your life and being happy, right? So don't let this bring you down. Remember, it's just phase 2. Phase 1, we already did out really well if we made our plays. Phase two, we're going to play the same cards basically with some tech involved if some major tech gets beaten up really bad and we know it's good long term, right? Okay, so I'm looking forward to this should it happen. I hope I'm seeing more and more and more big institutionals getting heavier and heavier cash. We have trillions and trillions of dollars on the sidelines, folks. So I might not be the only one playing heavy cash, which is what I'm doing. You can get burned there too. So, but I've also heard talk too from the Fed about between Fed and Treasury of how to try to get that money to move that's sitting on the sideline. So they may have some shenanigans up their sleeve to get that sideline money to move too, which is a few $1 trillion. Okay, so I think though the end result is we have a setup. See, these millennial investors have never been burned, okay, except maybe here and there, playing dumb plays anyway, okay, but these millennials are paying ridiculous PE ratios, driving tech stocks higher. Does that remind anyone of the dot-com bubble? These valuations are just as bad as back then, folks, okay, so now we have these, the tightening beginning. Anytime there's a tighten in the money supply, bam, things drop out, okay? And I don't think this new generation of investors, which is pushing tech at these valuations, they've just never experienced a smackdown, okay? And I think that time is coming now. So, but it should be a good play for us. We know that most of these valuations are ridiculous anyway and can't be sustained. So we have been preparing, right? So we're ready to go. Just keep all of it in mind. Keep an eye on your board if you have your board at home or whatever strategy you use to observe everything that's going on. But all these numbers combined do not look good, folks. And especially the final gun is the Fed talking about tapering and then talking about not raising the debt ceiling. Oh my goodness. Contraction of the money supply will take place, probably, right? That's usually what happens in the market tanks. The Federal Reserve's been causing booms and busts forever, haven't they? So if we see their playbook starting to be initiated, we can pretty much see what's coming possibly, okay? Or at least with reasonable probability. Like in '07, if you were really observant in '07, you saw what was coming. You could just see it. It was totally irrational. Well, we're paying irrational home prices. We're paying irrational prices on tech stocks. Totally irrational, okay? And many other stocks, just irrational. I mean, it's gotten unrealistic, okay? So maybe there needs to be this thinning of the herd, if you will, or whatever. And Bitcoin's been topsy-turvy also. I mean, we've got a lot of headwinds out there, folks. Pay attention to the numbers. This isn't fear-mongering. I'm ready to go. So I'm celebrating it if it tanks, okay? Because, bam, that's when I want to get in and make some. I do not want to be in high PE stuff. I just don't, man. I've seen it before too many times. I do not want to be in anything with a PE of 100, okay? That is insanity, right? So pay attention because the haircuts are starting on the big ones like Amazon, Tencent. Now start looking at many of the others. If you start seeing those 10% haircuts in one day or overnight, that's generally the big guys selling out, preparing for something, okay? Taking profits, getting off the table. Plus we have the October syndrome, right? The end of the fiscal year for business, they're selling off stuff anyway so that they can get their tax ready and all that, okay? So we have a lot going on. And if the Fed, again, starts tapering in September, well, and go look all this stuff up for yourself. This isn't financial advice. Just be ready. It's about time for phase two, our second haul, and then probably a third haul, and then in the end game will be real estate. Okay, and that's where we were headed since the beginning. Hope you're all doing well. I'm not selling my oil. Capital gains taxes are too high. So, and they're dividend-paying cash cows. So I'm just not going to sell them. I don't care if the market falls 50%. I'm not selling my oil. I bought it so low, it can fall 50%. I'm still up. Okay, it doesn't matter to me because I bought those oil stocks really low. So, and I like those dividends long term. Okay, growth and dividends long term because they're going to consolidate the oil market. That's my feeling. Anyway, pay attention out there. Okay, look at the numbers. Keep things on your radar. Okay, all these signals because it could take place anytime, as always. Right. So, anyway, that's all I wanted to share. Jim out.